very much for that. Those are some of the notes and also data which Soumit has looked at. But let's go ahead and take the discussion forward with Sanjeev Bhasin joining us from New Delhi. Sanjeev, very good afternoon. You must have heard the context that you were setting, some structural work happening there in the entire PSU space, but at the same time, many are, perhaps a little ahead of themselves in valuation terms. Now they are coming back. So the big question which you have to answer for our viewers, the big questions are the clouds of correction clearing now? Time to get back into some of the favorite PSUs? The PSU charm, is it intact or indeed there is merit to book out or book profits? Is PSU rally nearing an end for the time being or it will continue after a gap? And finally, valuations. How to weigh on the valuation front? How to analyze or pick names on valuation front? Sanjeev.
Yeah, good afternoon, Ajay. Firstly, congratulations. The market made a new high yesterday. And if you see, the bank nifty led that by 1,000 points, which is what I was saying. Private banks will now be in action. So PSUs have been a proxy to the GDP growth, the sheer underweight ownership and the pessimism at its highest 2 years back. And they've been the biggest wealth creators. I've been in the market 35 years. Never in 20 years have I seen the type of rally you've seen in 2 years. Purely on the earnings upgrade and the under ownership. Yes, there is some sort of plateauing there because the run-up was very sharp in the month of January. You saw OMCs rise like 30% in three days. And that is what maybe triggered some profit booking, particularly from large players like LIC and, some mutual fund. But Ajay, the sheer dynamism is the earnings. If I can give you some earnings, the energy basket, that is OMCs, upstream, downstream, will report 2.5 lakh crore of profit in the next 2 years, which you can imagine is the highest ever in the history. And all because the underlying theme of, no change in free pricing of fuel, ONGC having the best time as far as, their passage, and the upstream, downstream like MRPL being outperformers, all that has played out. So you have to be selective in your approach. I think there's no amount of, over leverage which has got corrected because of the market. But I still think PSUs are here to stay. You have to do your choice of how you want to play that. Particularly in OMCs, I think a lot of value has again re-emerged. If you just see the headline today, Indian Oil has increased prices of airline turbine fuel, which means that pessimism that there will be some rate cut before the election, all that is thrown out of the window. And the other bigger overhead fear was that this selective ETF flow sell-off is also not there. So the sheer weight of under ownership, valuation, and earnings catch up all have made PSUs a very sweet spot. Being selective now, right now, is the right approach, but creating a basket is necessary.
Absolutely. There are definitely major earnings tailwind in select. In fact, that's the beauty of this market. You get everything. You get low valued stock, you get expensive stock. So you cannot take a general call that all PSUs are untouchable right now. Some of the defensives, some of the defense PSUs may be factoring earnings for 4, 5 years, 6 years far out. But look at energy. Mr. Bhasin is talking about OMCs and oil marketing. They are flush with liquidity and still are trading at 3-4 times PE at that size. So point which he's saying is go and load up in this pullback on earnings backed PSU names. Move forward and get you some queries coming in. Sanjeev, I must tell you that there is such a lot of interest for this show that we are flooded with queries from across the country. So clearly, on the one hand, retail this time has been the biggest beneficiary because they only participated in this re-rating of PSU which have happened. Many funds missed out, but still many of the retailers are either holding on or wanting to participate. So I think that's the reason big queries are coming in. This one is coming from Chandramouli Tripathi from Gorakhpur. Chandramouli has bought 5,600 shares of IRFC at 158. He wants to understand, should it be bought if it falls further? What he should be doing? Sanjeev, IRFC?
So Ajay, IRFC has been a huge mover now. It has already been an excellent outperformer. And we've seen in railway stocks, maybe the earnings plateau is 2 years forward. So a large part of them may have already played out. You should be cautious there. Don't add on decline. I would rather suggest put money into IOC, SPCL. They have corrected much more than needed, and I think they can be very, very good outperformers. Don't buy a falling knife. Don't average stocks which are on the losing side, but get into better names like IOC, HPCL, which have more visibility and where I think the earnings factor will be even more better played out, particularly now with them being in all types of verticals related to oil, gas, refining, and even EV charging. So I think it's better to buy HP and IOC at this price because the price is in your favor.
Okay, oil marketing should be favored over IRFC because the stock ran up too fast. The second query is actually coming from the metal and mining space, Coal India. Now, Sanjeev, this one has actually surprised many on the street. ESG, this, that, Coal India will get derated, but actually got re-rated. And this query is on Rakesh Bhatnagar from Ghaziabad. He's got 2,000 shares at 303, and he adds another query on BHEL. You've spoken about this one before. 3,000 shares he has at 107. What should he be doing?
Well, Ajay, firstly, congratulations to him. And he spotted the tiger, right? And he took the plunge. Now, if anything, for Coal India, they should actually also put up the photo of Mr. Putin, because after the Russian-Ukraine crisis, suddenly thermal power, which was written off, came back and came up with a wow. Look where 220 has become 450 and raring to go. Coal India is the third largest coal producer, and now with their merchant pricing, they are even more raking in the bucks. Where have you seen this type of profitability? First time after its listing, it has come back with such stellar name. Stay put with Coal India, book partial profits if you want, and get into the names I suggested: IOC, HPCL, ONGC. BHEL has been a stellar run, and despite losses, people now realize that if power is going to be so much in demand, surplus power transformers, there is no other one than BHEL. The transformation of EV charging after Tata Power will be in the hands of BHEL and the real value unlocking. But I would say the valuations look stressed on BHEL. Take some profit and get into the three names which I've suggested. IOC, HPCL, ONGC are giving you excellent opportunities with visibility, earnings guidance, and valuation comfort.
Interesting. Okay, this one is a beauty. J&K Bank. 2 years back, J&K Bank was at 10% NPA level. The stock was 25. And then you see how J&K Bank got re-rated at 140 QIP. FI is also participating. Alok Mangla from Delhi got into J&K Bank, but at 131, slightly late in the game, and Bank of India at 120. What are your thoughts on this one, Sanjeev?
So excellent, Ajay. Just as a disclosure, when Article 370 was brought in, J&K Bank was 18-20 rupees, and I put my money where my mouth is, and I told everyone you cannot get the biggest bank, not in J&K only, but outside also, and one of the highest NIM players. It had a NIM of 10% because, as you know, in the Muslims, they don't consider interest as a receivable. And the J&K Bank was taking advantage of that. Most people didn't realize. I went and met the management. They sit in Gurgaon, and they told me their maximum business is in Maharashtra. So that 1820 became 144, which has been stellar. Now I would say get into large cap banks. My call would be that there is not that much of room because a large part of the earnings upgrade has happened. We will now see in the next 1 year some sort of NPA provision, NPAs rising because of the underlying economy and the cyclicality. I would say this is the time to get into HDFC and ICICI Bank. We have converted our PSU banks or are converting into HDFC Bank. We think safety of earnings, transfer visibility, and the pricing, 2 times price to book, you cannot get a better bank than HDFC. So book partial profit or whole and get into HDFC, ICICI.
Okay, so guys, bad news is that this space got re-rated already. You've come in on the later stage. You may want to flip to lower valuation alternatives like Sanjeev is recommending. The larger point from Sanjeev remains the same, that do not exit the PSU pack fully. There are several cases of transforming business models, still good valuations and earnings trajectory looking very good, which you should definitely consider on pullbacks. The story is not over. It's just got a little shaken because it had run up quite fast, and this opportunity is get to realign your portfolios in favor of select PSUs. Sanjeev, thank you very much for guiding our viewers and helping us on this special show. And viewers, thank you very much for watching this special edition of Tracking Trends Spotlight on PSUs. Goodbye. Action continues on ET Now.